Ngozi Okonjo-Iweala resumes duty as World Trade Organization DG. Banks to increase agri loans to 10%, says Emefiele. Japan's Nikkei jumps more than 2%. Oil prices climb after progress on huge U.S. stimulus bill, just as gold prices edge higher on softer dollar. The program is reaching you on the network service of the NTA from Abuja, Nigeria's capital. I am Musa Abubakar. The World Trade Organization's first female and first African Director General Ngozi Okonjo-Iweala began work on Monday, ending a 6-month leadership void at the global. The 66-year-old Nigerian was finally confirmed as boss last month, pledging to forget business as usual at the body which is struggling to strike new deals and whose arbitration functions are paralyzed. The first day of the former finance minister at the helm of the WTO coincides with a meeting of its top decision-making body, the General Council. Its 164 member states will discuss topics such as trade rules on COVID-19 vaccine distribution, which Okonjo-Iweala has identified as a priority. On the agenda is also the date and venue for its major ministerial conference, which was due to be held in Kazakhstan last year, but was delayed due to the pandemic. Okonjo-Iweala has said she hopes that the event will provide an avenue for clinching various deals, including on cotton fisheries subsidies and reform of the WTO's top appeal body, which was paralyzed by former U.S. President Donald Trump's administration. As part of plans to key into the 2021 Global Economic Recovery Forecast, the Governor of Central Bank of Nigeria, Godwin Emefiele, has pledged the Apex Bank's commitment to make local lenders raise facilities of agricultural sector to 10%, speaking at the Vanguard Economic Summit. He said to drive and sustain the envisaged massive recovery, there's need to sustain the accommodative fiscal and monetary policy measures aimed at improving access to finance to households and businesses, preventing resurgence in COVID-19 related cases, and ensure that a significant number of populace is properly vaccinated and improving foreign exchange inflows into the country. He added that in the next 3 years, CBN will continue to encourage the banking sector to increase its loans to the agricultural sector from 4% to 10% by 2024. The CBN intends to also improve non-oil export earnings with the implementation of 500 billion naira facility. Now, the spread of coronavirus, along with the corresponding containment measures, led to a significant slowdown in global growth in the first half of 2020. Commodity exports in countries like Nigeria face significant revenue challenges as commodity prices such as crude oil dipped by over 65% in the first half of the year. In addition to supply chain disruptions and drop in foreign exchange earnings, but with a handful of monetary and fiscal policies injected into the economy, we saw a fragile GDP growth of 0.11% in the fourth quarter of 2020. How can this growth be sustained is the focus of our discussion at this moment with a development economist, is Dr. Tafa Abraham. You're welcome to Business.
Nice to be with you, sir. Thank you.
Thank you. Now, COVID-19 came with a lot of challenges, so also opportunities. Well, How can we leverage on the opportunities?
On the opportunities, we have to identify those sectors that were able to survive year-on-year growth. If you compare Nigeria's GDP growth for the whole of 2020, you compare that with Nigeria's GDP by sector for the whole of 2019, you will see that some sectors were able to grow in the midst of COVID-19. GDP of 2019 against GDP of 2020. You will see that health sector is among the sectors that grew. You see that ICT also, and then some other sectors like entertainment and stuff like that. Agriculture still survived the growth, but it declined a little when you compare 2020 growth against 2019. So to capitalize on the opportunities, as you rightly asked, we need to identify those sectors that survived, that were able to sustain our growth for 2020. And then look out for those like education and aviation that were grossly affected by COVID-19 and see how to help them catch up, to come out from the deep hole that the COVID threw them into.
Okay. The economy grew by 0.11%. What does this mean for the country?
A lot of effort from the CBN, and I must commend the Monetary Authority, the CBN. A lot of interventions, a lot of innovations. In fact, many analysts never saw that growth coming. If you follow the news, you see that Lagos Chamber of Commerce and Industry expressed surprise about that growth. Even just before that period, IMF was also projecting that the growth might not be that way. So you see a lot of CBN maybe delving into, if I may, non-conventional monetary policy, if you permit me to say that. But the bottom line is that you see a lot of CBN intervention playing out, and again, with the best they can get from the fiscal space, which is always very limited because of a lot of legislation and lack of autonomy from all the authorities in that space. But the CBN had operational and operational autonomy, and they were able to take advantage of that autonomy to introduce a lot of innovations into the Nigerian economy to help push the Nigerian economy out of that recession. So that 0.11% growth, yes, it's small, but it's a positive signal for the market that Nigeria at least has come back to the path of positive growth.
Okay, how can we sustain that?
Great. So identify policies that can give more energy to what CBN is already doing. And already, CBN is never tired of innovations. And I assure you, you can never predict CBN enough. Innovations to keep sustaining small farmers in the agri space, innovations to increase lending, innovations that have reduced interest rate by 200 basis points, different sort of innovations. But all these at best can give signal to the market. So what we need to do is to look at the social investment space to see how to help people that are outside the equilibrium, people, sectors, that are outside the equilibrium, people that are caught up in unemployment, caught up in poverty trap, caught up in inequality trap, to see how we can extend social investment programs to them, like access to insurance, healthcare, credit, access to safe school initiative.
Okay, the CVED has invested around $18 billion into the economy, which is around 4.5% of our GDP. Is this a worthy investment?
Well, CBN has access to data that you and I can only imagine. These are people that are part of the economic man. In fact, they are the best in terms of the economy management team of the government. So for the CBN to be able to come out with that initiative, they must be up to something. The best we can do is to analyze. But I know that right now, given the way the Nigerian economy is, needing all help that is required, CBN is just in the right position to be able to play with that kind of innovation. But the bottom line is that it is going to address all the gaps that exist in terms of funding, in terms of production, in terms of the supply side gap generally. Because basically, me and you want to buy more food, we want to buy more of that, but the supply is not coming. So CBN's innovation in targeting these such sectors is just to see how we can help close the supply gap. And as an indirect effect, once you close the supply gap, you are able to have a situation whereby the aggregate supply and demand is a bit tamed, and we can begin to look at how we can control the non-monetary aspect of inflation, especially the food component and other components like that, because inflation is a serious issue still for the CBN.
And
anyway,
that's what I'm about to come to right now. With the inflation, and we have 0.11%. How do you think that will impact on the economy?
Okay, great. So growth is crippling, but inflation is the big boy.
Yeah.
Is the curve just going up? So what that means, however, is that our purchasing power, the value of it will not be equivalent the face value of our money will not match up to the real value of it, exactly. So, but again, don't forget, if you follow CBN's reports and analysis, what is driving that inflation is the food component, transport component, and things like that. So the CBN has every authority and is currently doing that to ensure that they tame those other components. But don't forget, the lockdown effect shut down a lot of production activities. Insecurity is also affecting farmers. People cannot move from one point to the other, moving goods across the nation. So when all these things happen, these structural rigidities, if I may, they are not something that monetary policy can bounce off easily. They are things that we must be able to address through tightening security and setting up in terms of having an effective COVID-19 eradication plan, if I may, through our vaccine, so that markets can open, goods and services can flow, and inflation will begin to come down. But for now, having a growth that's accompanied with inflation is something that we may just have to live with. But still, even though the inflation is higher, and the good news on the growth part is that we just came out from the negative zone, and that 0.11% is a positive signal to our macroeconomic environment, and it shows that at least our policies are back on track.
Okay, part of the steps to recover, we saw extension of moratorium, reduction of MPR to 200 basis points from 13.5 to 11.5%. Now, to encourage somehow lending. Did that actually help?
Now, when the CBN reduces by 200 basis points, that's like 2% from 13.5 to 11.5. So the idea, like I said, the best the CBN can do is to keep positive signal out there. There's something economists call rational expectation. CBN wants the market to be free of every form of rigidity, any form of clog in the neck, any form of clog in the pipe that will make the water not to flow. So our macroeconomic environment at all times must continue to dish out positive signal. So the reduction in interest rate, in principle, it gives positive signal to the lending. So what that means is that those who want access to credit can now go to the financial market and get it at the lesser cost. So the more they get access to credit, the more they continue their production activities. Then as production continues, they employment gives people income. It goes round, unemployment comes down, poverty comes down. So this signal, CBN will not lose track on this signal. So that itself is a good one. But what economists will also want to be concerned about is comparing the interest rates in terms of coming from 13.5 to 11.5 against the inflation rate. But again, because that's how people do this calculation, comparing the size of interest rate against inflation. But bottom line, again, we understand what is driving that inflation. It's not, in a sense, a monetary phenomenon, if I may. It's a non-monetary phenomenon coming from food and transport. So as a monetary policy variable, reducing from 13.5 to 11.5, the liquidity market, the ISLM model, the investment savings and the money market, at least space, the financial market space, we get some positive signal, and they can be able to embark on decisions that can affect real household, real producers, create jobs, and then reduce unemployment.
Now, let's turn attention to the manufacturing sector to support local manufacturing and real sector projects. Disbursement on more than 476 billion naira was made. Did that actually help boost production? Yes,
basically the manufacturing sector was among, in fact, that one has had a long time challenge in the Nigerian economy. If you go from 1970 to 80s, 90s, 2000, 2010 till date, then COVID-19 just gave it a bigger punch. So, but still, if there's no manufacturing, there will be no output input channel for the agricultural sector, because every produce from the agricultural sector is supposed to feed into the manufacturing sector. Every produce from horticulture, from animal husbandry, all are supposed to feed into the manufacturing sector to end up as belt, as shoe, as one product or the other. Every overproduction of mangoes and fruits and things like that should end up in the manufacturing sector to become juice, homemade juice, and things like that. So, but where there is no manufacturing, you just be having waste. So Nigeria can only eat mango during mango season and take orange during orange season. That seasonality, you see, where you can't find a fruit outside its own season, shows that our manufacturing sector is really down. So to continue to give a push in that area is really important. And don't forget, based on our history, the manufacturing space has infrastructure nationwide, but the challenge is that they are moribund. They've been stale. They've been lying down like that. So they need this capital injection to revive them and get them running again, to create jobs that will really impact on the people.
Okay. Now, with the vaccine rollout underway, where would you put the Nigerian economy at the end of the year?
The vaccine, the COVID-19 vaccine rollout is a big news for the global economy, because don't forget, the recession that many countries are experiencing, including the one Nigeria just came out of, thank God, was COVID-19 propelled. So the vaccine in itself, I've been drumming about positive economic signal. Having vaccines arriving in Nigeria on Tuesday is also part of a positive signal from the health angle. But don't forget, ultimately, it's still about trade policy. And for any country to get any vaccine, it depends on the country's trade policy with the rest of the world. So with that vaccine out, we see businesses reopening. We see mama put reopening. We see banks reopening. We see people's food vendors morning, night time reopening. Because until those businesses open, until churches, mosques are able to open, to create so that those small businesses around those churches and mosques can continue, so that ShopRite and all those businesses, all those malls, all farmers market, all of them can continue in business. Until they open, we're not likely to see growth. So the vaccine is a good news for business reopening and for growth.
Thank you, Dr. Tefa Abraham.
Thank you so much, Musa. I appreciate it. Yeah.
Okay, moving on. Oil prices rose more than $1 on Monday on optimism in the global economy, thanks to progress in a huge U.S. stimulus package and on hopes for improving oil demand as vaccines roll out. Brent crude futures for May rose $1.07 to $65.49 per barrel. The April contract expired on Friday. U.S. West Texas Intermediate crude futures jumped $1.10, 1.8% to $62.60 a barrel. Now, gold edged higher on Monday, recovering from an 8-month low touch in the previous session as a weaker dollar lifted bullion's appeal. Nigeria's stock market failed to sustain the positive momentum in the month of February, despite being adjudged one of the best performing stock exchange in Africa in the month of January 2021. This is coming after investors counted losses to the tune of 1.38 trillion naira as against 1.13 trillion naira they gained in January. Daily Sun investigation revealed that the transactions on the floor of the Nigerian Stock Exchange witnessed an opening value of 41,147.39 points and closed at 39,799.89 points, while market capitalization closed the month under review at 20.823 trillion naira from an opening value of 22.186 trillion. Furthermore, the year-to-date closed the month at minus 1.17% compared to 5.32% recorded in January, according to analysts. The rising yields in the fixed income market weigh heavily on investors' sentiment. Now, the Nigerian Stock Exchange Consumer Goods Index, an index that tracks the performance of consumer goods companies, depreciated by 8.12% in the month of February at the back of sell-offs and building negative sentiment in the market. A preview of the performance of the index revealed that as of Friday, February 26, 2021, the index stood at 563.85 index points from 613.69 index points at the open of the trade for the month. Consumer Goods Index shared a total of 49.84 index points, the highest since March 2020. For more on stocks in the week ended, let's have details. A total turnover of 1.930 billion shares worth 20.656 billion naira in 24,687 deals were traded last week by investors on the floor of the exchange. NSE All Share Index and market capitalization depreciated by 0.96% to close the week at 39,799.89 basis points and 20.823 trillion naira. The financial services industry led the activity chart. The conglomerate industry followed with 154 million shares. The third place was consumer goods industry with a turnover of 111.782 million shares worth 2.27 billion naira in 3,865 deals. Trading in the top three equities, namely Wema Bank PLC, Zenith Bank PLC, and First Bank Holding PLC, accounted for 782.167 million shares worth 8.914 billion naira in 4,624 deals. A total of 159,764 units of exchange-traded products valued at 1.251 billion naira were traded in 20 deals. A total of 21,438 units of federal government bonds valued at 23.282 million naira were traded in 18 deals. All other indices finished lower with the exception of NSE Banking, NSE AFR Bank Value, NSE Mary Growth, and NSE Oil and Gas indices, which rose by 0.69%, 1.34%, 0.66%, and 0.97%, while the NSE ASAM and NSE Growth indices closed flat. 19 equities appreciated in price during the week, 44 equities depreciated in price, while 99 equities remain unchanged. Now let's turn our attention to the Nigerian stock market. Let's see how it's faring. Well, the all-share index happened to gain 0.33%. To end trading at 39,931.63 points. 543.9 million shares valued at 1.8 billion naira exchange hands in 4,673 deals. Market capitalization stands at 20.8 trillion naira. Now, a look at the top trades. Nema Bank, Zenith Bank, and Transcorp are the most active shares. Now, moving on, Japan's Nikkei jumps more than 2%. Data show China factory activity growth slowed in February. Eneka Oko reports.
African markets started the week mixed as both Namibia overall index and Nairobi all-share traded in negative territory at 0.27% and 0.15%, while South Africa's JSE Africa Top 40, Tunisia's Tunidex, and Ghana's GSE posted gains. Stocks in Asia Pacific rose on Monday. In Japan, the Nikkei 225 jumped 2.41% to close at 29,663.50 as the index recovered partially from its nearly 4% plunge on Friday. Mainland Chinese stocks also saw robust gains, with the Shanghai Composite gaining 1.21%, while the Hong Kong's Hang Seng Index advanced 1.63%. European stocks rose sharply on Monday amidst global markets rally on falling U.S. Treasury yields and boosted by positive news on the coronavirus vaccine front. London FTSE jumped 1.92%, Germany DAX 1.30%, while CAC 40 of France climbed 1.63% at 5,795.98. Meanwhile, U.S. stocks rose in early trading. The Dow Jones Industrial Average advanced 334 points, while the S&P 500 and Nasdaq 100 also both traded in positive territory. And that's Global Markets Update. I'm Neka Oku.
Thank you, Neka. This is where we end this episode of the program. Don't forget you can access this and all previous episodes on YouTube. You can also communicate with us on Twitter, and the handle is NTA News Now. The hashtag is BizX. Stay safe while thinking and doing business. I am Musa Abubakar.